It is the 3rd of April, 2023. My name is David Hickson, and I am again doing a live stream for our market update. So hello, everybody. I'm playing around with different settings and trying different things with the cameras. So let me know what you think. Before we take a look at the markets today, I must ask you to please make sure that you have read and understood these disclaimers. So let me bring myself full screen. There we go. Then I can change the background and let me know what you think about the different background. I'm not using the corporate background today. I'm just simply showing you the background in my office. So let's take a look at the S&P 500. The subject of today's market update video is reaching for a peak because, of course, the markets are moving upwards and they are reaching towards the peaks. And peaks, as you probably know, when it comes to Hurst cycles, are fairly complicated. And so I thought it would be great to take a look and discuss the whole idea of how we track markets approaching peaks according to Hurst cycles. Let me quickly say hello to a few people. Hello, Mobalaji, and hello, Jose Analysis Chiclico from Madrid. Thank you very much for joining me. Let's take a look at the S&P 500. In fact, what I'm going to do first of all is zoom out a little bit. In fact, I'm going to just zoom all the way out and take a look at a really big picture for the S&P 500 just to remind ourselves of what is happening. And the first thing to point out is that, of course, in this analysis, we have a very prominent trough in the S&P 500. This is SPX data from my trading platform. It's effectively the S&P 500. And we had a very big trough in March of 2020, which you can see has been phased as a trough of the 9-year cycle. I tend not to take the very long cycles too seriously when looking at these analyses, just to remind you. So I consider that to be a trough of at least 54-month magnitude. So I will zoom in and we will consider what has been happening since that at least 54-month magnitude cycle trough back in March of 2020, the trough that I often call the pandemic trough, as a matter of interest. And I'm going to pop up a few other messages from everybody as they say hello. Welcome to our third live stream. I'm really excited to be joining you live. I've been enjoying these live streams. So hello to everybody. I'm seeing some familiar names and some new names. So it's wonderful to see you all. Thank you again for joining me. So let's take a look at what's been happening since the March 2020 trough, the pandemic trough, which, as I've mentioned in previous market updates, could potentially have been stretched to the downside because of the fact that the news of the pandemic was sweeping around the world. And so that could be a distorted trough in terms of the price level. It could have moved well below where it might have moved if it hadn't been for the pandemic. Our first 18-month cycle trough, and my pen's giving me problems. Perhaps this computer is struggling to keep up with the live stream. The first 18-month cycle trough, of course, has been phased in October of 2021. And the most recent 18-month cycle trough over here is this trough in the middle of October of last year. So as discussed in previous market updates, and let me just clear those pen marks, we have experienced a very bullish 18-month cycle for this cycle from March of 2020 until the trough of October of 2021. And then we experienced a bearish 18-month cycle. You can see the bearishness over here because of the fact that we had an early peak and of course we had a much lower trough in October of 2022. So that makes a bearish 18-month cycle. Now, if this trough in March of 2020 was a trough of at least 54-month magnitude, then of course we would expect 3 18-month cycles to play out into the next 54-month cycle trough. And so we are currently in the third and therefore the most bearish 18-month cycle that must elapse to bring us into the next 54-month cycle trough. I've discussed this in previous market update videos. I don't want to spend too long focusing on that. So let's zoom in again and consider First of all, the current 18-month cycle. Here we are still on a weekly chart, and I'm going to quickly pop up a few more messages. I'm seeing many of them flowing in. Hello to everybody, and welcome to our live stream today. Thank you so much for joining me live. I hope that you're enjoying the live experience. I'm certainly rather enjoying it. And so it's wonderful to see you all here and to see some names of people that I have seen in the Hurst Cycles world for many years. So let's take a look at the current 18-month cycle. As I mentioned, the current 18-month cycle is expected to be the most bearish of the three 18-month cycles that will elapse between any two 54-month cycle troughs. And so if the March 2020 cycle trough was a 54-month cycle trough, then this should indeed be the most bearish 18-month cycle that we would see playing out. And so in terms of a bearish 18-month cycle, we would expect two things. We would expect an early peak, and we would, of course, expect it to bring price down to a lower level when the next 18-month cycle trough forms in early 2024. So speaking about an early peak, is it possible that this peak over here was the peak of the current 18-month cycle? It is possible, but we cannot say for sure that that is the peak of the current 18-month cycle, because price is currently reaching up towards a peak of the 40-day cycle. Oh, and I'm zooming all over the place here. My computer is struggling to keep up. I do hope that the live stream is okay. The computer is really struggling to do all the things I'm asking it to do. And I'm seeing several more messages and some questions. And so I will get to those in a minute. Let me finish this train of thought. So here we have at this zoom scale on a daily, this is now a daily chart. I've changed the scaling to a daily chart. We have a 20-week cycle, and this pen really doesn't want to draw on my chart anymore. Probably I am overstressing this computer. So we have an M shape for the first 20-week cycle, and that is the first 20-week cycle out of an 18-month cycle trough. So if you take a look at the diamonds at the foot of the chart, here is the diamond for the 20-week cycle. It's that solid green color. Here is the next 20-week cycle trough. And you can see that at this stage here, where the 18-month cycle trough has been phased, there are two diamonds above that 20-week cycle diamond. Of course, it is the 40-week cycle diamond and the 18-month cycle diamond, which means that both of those troughs are pushing upwards. I hope that makes sense, because the 40-week cycle and also the 18-month cycle are bouncing out of troughs at that point. In other words, they are influencing the markets to move upwards. That gives us what is called an underlying trend that is bullish. And so because those two longer cycles are pushing upwards, it was not a surprise to experience a bullish 20-week cycle. How do we define this 20-week cycle as bullish? Well, first of all, obviously, it formed a trough at a much higher level than the level at which it started. That's the first necessity in a bullish cycle. And the second reason why we can say with confidence that this was a bullish cycle is because of the fact that the peak occurred late. There is the peak over there. I think that was in the end of January this year. And so you can see more time passed following the initial trough up to that peak than passed after the peak on the way down to the next cycle trough. And I will be getting to your questions. Yadranath, I do see a question for you. I'm not going to pop it up on the screen just yet. I'm going to handle questions later, but I am going to quickly show the hello messages from everybody, because if you say hello, I like to say hello back again. And so it's wonderful to see you all. And Yadranath, I am seeing your questions. I will be getting to them a little later. Okay, so let me clear the chart there. So we have had a bullish 20-week cycle. What are we expecting for the next 20-week cycle? I discussed this in was it last week's market update video, or perhaps 2 weeks ago? And so I hope by now you know that we are expecting a less bullish cycle. The reason for that is because of the fact that the 40-week cycle trough, and here's the nest of lows for the next 40-week cycle, the 40-week cycle trough lies ahead of us. And so the current 20-week cycle that we have been in ever since about the middle of March. There we go. I think that was the 13th of March, that trough. And so the current 20-week cycle has, of course, still a rising 18-month cycle, because that 18-month cycle is still young. It hasn't been running for very long. And the 40-week cycle, of course, must have turned down. One easy way of visualizing that is to display the semicircles. So let's quickly display the semicircles just so that I can present that to you visually. And let's just hide some of these shorter semicircles because we're not really very interested in those. And there we go. I think that will do for us. So here you can see in the semicircles, let me hide the 20-week semicircle because it's a little bit distracting. So here you can see the 40-week semicircle and the 18-month semicircle. The 40-week semicircle turns down over here. The semicircle is a very simple graphic representation of the cycle. It is not actually measuring where the peak of the cycle is. The semicircle is, as its name suggests, purely a semicircle. And so it is therefore expected to turn down halfway through the cycle. But here you can see graphically, if you like, the 18-month cycle is pushing up, and it continues to push up. It's off the top of our chart, and the 40-week cycle was pushing up during this period of time over here. And so therefore we expected a bullish 20-week cycle. Now what has happened is that the 40-week cycle is, of course, pushing downwards, and the 18-month cycle is still pushing upwards. It's above the top of the chart. And so whereas here we had an underlying trend of +2, if you like, 40-week cycle plus 18-month cycle, here we have an underlying trend of 0, if considering only the 40-week and the 18-month cycles. I'm not going to speak about the longer cycles just yet, because that's just going to confuse us, I think, at this point. The important thing is that the current 20-week cycle is expected to have less bullish underlying trend, less bullish pressure. And so we are not expecting quite such a bullish cycle. So let's consider what we are expecting. It's not going to be quite so bullish. So what is going to happen? Let me hide the semicircles again, and let me pull this down again. And let me quickly draw a very simple M shape, because I think that makes a very good place to start. This pen is giving me a little trouble today. There we go. We had a bullish M shape for that 20-week cycle. A really interesting and fairly good place to start for your expectation for the next cycle is actually very simply to draw a fairly symmetrical shape. So if I draw a symmetrical shape, that gives us a fairly good starting point for the next cycle. And as you can see, that implies an early peak, and of course it implies a lower trough. That's a good starting point. Are we expecting the 40-week cycle trough to come down as low as this 18-month cycle trough? Well, we don't know yet. And so for now, this image, if you like, of the next 20-week cycle is something that we need to bear in mind in terms of our expectation over the next several months. 20 weeks is, of course, about 5 months, roughly. And so over the next 4.5 to 5 months, that is what we would be expecting to happen. So what's happening now, of course, is the price is moving up towards a peak. So let's speak about the main subject of today's video, which is, where is this peak going to happen? How are we going to know that it has happened? And should we consider trading the peak? In other words, should we consider going short, perhaps, as price reaches that peak? Those are really the three subjects that I hope to discuss in the course of today's video. And I do see several more questions. Let me just quickly, if you'll give me a moment, I'm going to see if any of them apply to the discussion so far. Otherwise, I will loop back and answer the questions later, if that's okay with you. I want to get through the main content before I answer the other questions. And here's a question that I think has to do with what I've already spoken about. How do we not miss the much larger cycles by looking at smaller cycles? For example, the most I know is 54 months, but what if I'm seeing that when something higher is about to happen? Okay, so I think that has to do with my comment earlier about not taking too seriously the position of the 9-year cycle trough. I'm assuming that is what that question has to do with. It's a great question, and if you don't mind, I'm going to loop back and come back to that, because I would like to finish speaking about the peak, but I will come back and answer that question. And I see a question from Mobalaji as well. And so Mobalaji, I will return to that question. Gosh, please remind me if I don't get to it. I do see another question, not a question, but a comment from Yadunath, mentioning that it would form a good head and shoulders pattern too. So that's a really interesting point, and it's worth just highlighting, because of course I drew the expected cycle shape on the assumption that we get some symmetry. And as Yadunath has pointed out, that would form a head and shoulders pattern, which of course it would. And there's a really interesting interplay between, I beg your pardon, I've hit the microphone. I hope that didn't come across too badly. That creates, there's a really interesting interplay between Hurst cycles and classical technical analysis. And one day I will make many videos about that. But head and shoulder patterns are formed as a result of the cycles that are influencing the market, dare I suggest. I'm going to leave that there because it's a really big discussion. So let's take a look. Let's zoom in and ask ourselves, first of all, what peak is this cycle now heading up towards? I've mentioned that we're heading up towards the cycle peak. So what cycle peak are we heading up towards? As I've mentioned, we might be looking at an early 18-month cycle peak. Are we heading towards an 18-month cycle peak? Well, we don't know that yet, because the 18-month cycle could have already formed a peak and we might not reach a new peak, but we have no new evidence to actually structure our ideas around this potentially being an 18-month cycle peak. So what peak is this? Well, we look at the foot of the chart and we can ask ourselves, what's happening with these nests of lows? Here is a nest of lows for the 20-day cycle. The 20-day cycle is almost certainly at that position over there. So we are not heading up to the 20-day cycle peak, because the 20-day cycle peak, the previous 20-day cycle peak, occurred there. Why hasn't the software positioned diamonds below that very obvious cycle trough? It has to do with the way in which the software performs an analysis, which is based upon the approach presented by J.M. Hurst in his cycles course in the 1970s. He published his cycles course in the 1970s. And he proposed an approach which is that you require a certain amount of evidence before you actually position the diamonds. You might say to yourself that there is a good deal of evidence. VTLs have been crossed and FLDs have been crossed. Indeed. However, the software takes a very structured approach to actually positioning those diamonds, which is why I often say that diamonds are not a trader's best friend, but your circles and whiskers, your nests of lows are. Nests of lows and circles and whiskers tell you when to expect a trough. You do not wait until that trough forms in order to make a trade or to make any trading decisions. And so what is the next peak that we are expecting? Here is our next nest of lows. It is a 40-day cycle trough that we are expecting in about the middle of April. And so the peak that we are currently heading up towards is going to be a peak of the 40-day cycle. I hope that is clear. It will probably, of course, also be the peak of the 20-day cycle, right? Because the 20-day cycle fits in within that 40-day cycle. Is it going to be the peak of the next nest of lows, the 80-day cycle? We don't know that yet, so let's not make assumptions on the basis of things that we don't know. Where is this 40-day cycle peak going to occur? At this point, we turn to some of our cycle tools, and the most useful tool, and there are several of them in CentInTrader, and I would be the first person to admit that CentInTrader is a software package that is so loaded with features and tools that sometimes it can become a little confusing knowing where to start. What we're going to discuss today are the targets generated as a result of the FLD. The FLD is an extraordinarily powerful cycle tool, and it generates very accurate targets. those targets are very often achieved, and they're very often achieved extremely accurately. Now, I have made a few notes here so that we don't have to sit here measuring intersection levels and all that kind of thing. The 40-day cycle FLD, as you can see, was crossed over the weekend. In fact, this was the weekend 2 weekends ago, the final weekend of March, and the price, as you can see, crossed over the FLD. It's an important point, and I make it often, the fact that when you're plotting an FLD, you should do it on a chart that includes gaps when there is no trading. I'm not going to go through that again because I've mentioned it so often. I'm sure you're a little tired of hearing it. Nevertheless, this FLD was crossed by price at a level of about 39.80 when you look at the level at which median price crossed the FLD. And that generates a target up to a level of 41.54. And so that target has not yet been reached. Here is the target of 41.54. I was quite amused to see about 20 minutes before, perhaps about an hour before I went live today, news coming out because of the fundamental things that happened around oil. There's a lot to be said about oil, but news headlines that came out indicating that the stock markets were moving down because of what had happened to oil. And that was a little bit of a sort of a trigger reaction from the financial media, because in fact the US markets hadn't even opened yet, and the markets hadn't really been moving down. I find it quite interesting to compare news events and the times at which the headlines are released and what's actually happening in the market at the time. And often it's a bit of a knee-jerk reaction because oil is going up, markets must go down, but it is not quite it's not quite as direct as that. That's the subject for another video, of course. As you probably know, I love discussing the concept of news events interacting with financial markets. And I see William has said that the futures price has reached it. Of course, I'm not sure that I'm watching exactly the same price as you. I'm looking at data from my trading platform for the SPX, so we might have slightly different data. But William is saying, and I don't have any live charts running here because of the tremendous demand on my computer in terms of doing live streaming. So I'm not actually seeing live data here. This data was updated about an hour ago, I think. And so that is our target as a result of price crossing the FLD. You would probably need to look at the FLD on your own trading platform or whatever instrument you're actually trading just to calculate that target exactly. But now, what about the other FLDs? That is our target for the 40-day FLD. Wait, before I get to the other FLDs, I have a few other things to say. When price reaches the target for the 40-day FLD, what do we expect to happen? So in order to answer that question, we have to ask ourselves, what is the underlying trend of the 40-day cycle? This is a 40-day cycle peak. What do we expect to happen when the 40-day cycle peak is reached? And to answer that question, we need to ask ourselves what the underlying trend is of that 40-day cycle. So you can see we have an 80-day cycle that is pushing up, and we have a 20-week cycle that is also pushing up. However, we have a 40-week cycle that I demonstrated earlier is pushing down, and we have an 18-month cycle that is still pushing up, and we have a 54-month cycle above that which is pushing down. Okay, I hope that calculation makes sense to you. And so if you add all of those up, going all the way up to the 54-month cycle, then you end up, I think you can see, with a result of +1. In other words, we have a slightly bullish underlying trend for this current 40-day cycle. That means that if we have a slightly bullish underlying trend, we would expect that target to be reached and probably slightly exceeded. So in other words, you will not want to sell short at the moment that price reaches the target. So you clearly should never really do that. When price reaches a target, all it indicates is that that particular cycle has fulfilled its purpose in terms of carrying price up to the target of that cycle. You need to consider all of the other cycles, and you need to consider many other things before you take a trade as a result of the target having been reached. I hope that that is fairly clear. Let's take a look at some other FLDs here. We had the 20-day FLD. Of course, the 20-day FLD was crossed way back over here in about the middle of March, and its target was reached. I did calculate its target a little earlier. Its target was a level of 40.44, and there we can see there. So that target was reached. In fact, it wasn't quite reached by the high price on this bar over here on the 22nd of March. I hope you can see that. I think if you look at the right-hand edge of the chart, you can see I've moved my mouse now to a price level of 40.44, and it is just above that high price on the date of the 22nd of March. And so you can see the accuracy of that 20-day FLD. They produce extraordinarily accurate targets. So that target was reached. That target is now over. Okay, it's been fulfilled, it's been reached, so we don't need to think about it. Let's look at the next longer cycle FLD. And this is the 80-day cycle FLD. And what I'm going to do is I'm going to zoom out a little bit, and I'm going to go to a weekly chart to consider the 80-day cycle FLD. You must be careful of looking at a cycle FLD on a chart that has too much resolution, too much granularity, because you will find the price will fluctuate back and forth across. You get a lot of whipsawing across that FLD. Here, price, you can see, was crossed above the 80-day FLD, and we would, of course, expect the target generated as a result to be achieved not necessarily within this first 40-day cycle. So this might not be the target for this peak that we are approaching right now, but we would certainly expect the target to be reached before the 80-day cycle trough, which should form, as you can see at the foot of the chart over here, in about the first week of May. And that target that was generated as a result of price crossing the 80-day FLD is a level of 42.34. So if I draw that on the chart, I think it's roughly over here. I'm just estimating that price target. So the interesting thing, to get back to that symmetrical shape that I drew earlier in terms of that M shape, is that if price achieves the 80-day cycle target, then it would be at a level that is just above the previous high in early February. So here's an interesting question for you. What is the underlying trend of the current 80-day cycle? Can you answer that? We'll do it very quickly. The 20-week cycle is pushing up, so that gives us a +1 level. The 40-week cycle is pushing down, that gives us a -1. The 18-month cycle is still pushing up, so that's a +1. And the 54-month cycle is pushing down, that's a -1. Add up all of those ones and you end up with a grand total of 0. In other words, this cycle, this 80-day cycle, has a neutral underlying trend. A neutral underlying trend means that we might expect the target to be fairly accurately reached, but probably not very far exceeded. So that gives us an indication of what to expect in terms of that 80-day cycle FLD interaction. Let's quickly take a look, because my time is running out. I'm determined to keep this video fairly short, and I must get to your questions. Let's quickly display the 20-week cycle FLD. Here is a really interesting example of price interaction with the FLD according to the FLD trading strategy. Let me quickly remind you, and I'm going to say this fairly quickly because I've done this so often in these videos. I don't think I need to repeat myself too often. The first time that price crosses the 20-week cycle FLD following a trough of at least 18-month magnitude, in other words, 2 cycles longer, following that trough, that is our A category interaction. And that generated a target way up here. Are we expecting that target to be reached or exceeded? Now, you will need to calculate the underlying trend for the current 20-week cycle in order to answer that question and tell me whether it has whether we expect it to be reached or exceeded, or perhaps not quite reached. Then, at about the time that the 20-week cycle trough forms, we would expect price to find support at the level of the 20-week FLD. That is a sequence of interactions that we label B, This pen is really not playing the game today. B and then C. B is where price comes down and finds support at the level of the FLD. C is the interaction where price pulls up and away from that FLD. This is a perfect example, yet again, of the kinds of interactions that we expect between price and the FLD. We had an A category interaction and then a B and a C category interaction. What about what happened over here at about the time of the 80-day cycle trough, where price again, or previously, found support at the level of that 20-week FLD? That is labeled also a B and C category interaction, because we do often experience or find in the markets double B-C category interactions. And so that is exactly what has happened here. There is one other FLD that I would like to show you before I take a quick look at the Nasdaq and answer some questions. And that is a really interesting FLD, in my opinion, and we're going to need to zoom out and take a look at it. That is the 18-month cycle FLD. Isn't that interesting? Price has come up to the 18-month cycle and is at pretty much exactly the level of that 18-month cycle. It has been tracking along that 18-month cycle FLD for the past 2.5 weeks, roughly. So what are we expecting here? What do we expect to happen at the level of this 18-month cycle FLD? Well, first of all, if price manages to cross above the 18-month cycle FLD, and we should probably be looking at this cycle on this FLD on at least a weekly chart, which we are doing, maybe also a monthly chart. I'll change to monthly in a moment. If it crosses above the 18-month cycle FLD, that confirms the fact that an 18-month cycle trough has formed in the market. I'm pretty confident that 18-month cycle trough has formed in the market already, so I'm not really going to wait for that confirmation, but it will provide us with a little bit of extra security in terms of that trough having formed. And if we change the resolution of the data to a monthly chart, and let me just zoom out here and slide the chart across, you can see over here price is in the process, perhaps I should say, of trying to cross that 18-month FLD. And so that is what is happening in terms of the S&P 500. I wanted to quickly show you the Nasdaq, because the Nasdaq shows a slightly different and very interesting picture, which we need to bear in mind, starting with a weekly chart. The difference with this analysis of the Nasdaq, which in my opinion makes it so interesting, is that the 9-year cycle trough and the 54-month cycle trough have actually been phased in December of 2018. Now, we could have a debate about this, but I've been running this video for 32 minutes already, and it is time for me to start bringing this video to an end, so we're not going to debate this at this point here. But it makes for a very interesting situation. I've mentioned this in previous market update videos, the fact that in the Nasdaq, because there was a lower price trough in December of 2018, the trough in March of 2020 is then phased as only an 18-month cycle trough. And we had a 1-month, 18-month cycle there, our first 18-month cycle there, too many months in that sentence, our second 18-month cycle over here with the trough in October of 2021. And this was, of course, our third 18-month cycle, which completed in October of last year. What does that mean? 3 18-month cycles means that this was possibly a trough of the 54-month cycle as well. If it was a trough of the 54-month cycle in the Nasdaq, the chances are very high that it was also a trough of the 54-month cycle in the S&P 500. Why isn't it being phased like that? Because possibly of the distortion of the March 2020 trough that formed because of the pandemic, or at least the distortion was caused by the pandemic. And so we need to keep in mind the possibility that not only did the 54-month cycle trough form in October of last year, but that implies that we are expecting a bullish 18-month cycle to happen now. That is what this Nasdaq analysis is suggesting, that if the 54-month cycle trough formed in October of 2022, then we would expect a bullish 18-month cycle trough to form now. I would be really interested to hear what you think about this. We're not going to have time to discuss it further in today's video, because I do want to try to finish today's video pretty much on time. And so we're not going to go into depth about it now, but I put it out there as an idea. I would love to hear what you think about it. That is why when we are looking at the projected shape for the 20-week cycle that I showed earlier in the S&P 500, I'm not absolutely determined that this is going to end up being a bearish 18-month cycle. It is possible, as is seen in this analysis for the Nasdaq, that the 54-month cycle trough formed in October of last year, which would indicate then that we are expecting a less bullish 20-week cycle than we encountered from October of 2022 until the middle of March of this year. It will be less bullish because of the fact that the 40-week cycle has turned down, but it is possible that that 54-month cycle is pushing upwards, which will not turn it into a very bearish cycle. Now, the last thing I would like to say about the Nasdaq is I'm often asked, how do we handle the peaks? What do we do when cycle peaks are achieved? So in this case, for instance, the 40-day cycle peak as calculated, the target as calculated by price crossing above the 40-day FLD, as you can see, has very easily been achieved. Do we jump into a short trade when the target is achieved? No, absolutely not. What we need to do is we need to watch the FLDs for the shorter cycles, 20-day, 10-day, and even 5-day. And we watch what happens as price begins to cross down through those FLDs. Price crossing below a 5-day FLD would indicate that we have experienced only a 5-day cycle peak. It doesn't necessarily mean that the 40-day cycle peak is in place. Okay, so we will be watching our FLDs, and the other thing that we will, of course, be watching will be our VTLs. We need to find suitable VTLs, and at the point at which those VTLs are crossed is the point at which we will begin to take very seriously the possibility that that peak has formed, and only then would we actually trade short if we are expecting a bearish move to have some impact, which at the moment I'm not expecting in either the S&P 500 or in the Nasdaq. So I've seen many questions. That brings me to the end of what I was planning to speak about in terms of price moving up towards the peak. Let me come back to the earlier questions and see if I can quickly go through them before I say goodbye and see you in our next live stream video. Let me change that back to the S&P 500. Let me show, first of all, the question from Yadnath, and unfortunately, I think the context of this question might have been missed now. Yadnath is saying, not sure how confident one would be about the exact occurrence of the second 18-month trough. Is it possible it hasn't occurred yet? Okay, that's a really interesting question. Let me just zoom out here and show you why I believe that the second 18-month cycle trough has occurred. We're looking at a monthly chart here. Let's change back to weekly. Right. I would call into question the exact position of this October 2021 18-month cycle trough. I think it is possible that this trough occurred earlier, but that's not your question. The question is questioning this 18-month cycle trough over here in October of 2022. The reason why I think that that is an 18-month cycle trough has to do with the 20-week cycle shapes on each side of that trough. Here is the 20-week cycle shape before that trough. You can see that it is a bearish cycle shape. It had a fairly early peak, and it brought price down to a lower price level. That's a bearish 20-week cycle by definition. What happened to the first 20-week cycle following that trough? I'll draw the full M shape. That is a bullish cycle, bullish 20-week cycle, as I've already mentioned. When you get a bearish cycle followed by a bullish cycle, that implies that the trough of a longer cycle occurred in between those two cycles. I hope that makes sense. I'm not going to explain it in greater detail today, but that implies that we had a greater cycle trough here. In other words, either 40-week cycle or an 18-month cycle. Now, we could debate the possibility that this was a 40-week cycle, but we won't do that today because there isn't time. But the reason that I think that was probably an 18-month cycle is because it must have been, in my opinion, a trough of at least 40-week magnitude. Great question. Thank you very much. And your next question, Yadnath, was this, especially if the second occurrence is late, like the first one? Yeah, that's right. If those cycles are stretching, of course, then maybe that was only a 40-week cycle trough that occurred in October of last year. That is possible. It stretches those wavelengths. In my opinion, it stretches them unacceptably, but that's something that we'll have to have a look at in a future video, perhaps in one of our Q&A videos. I plan to do regular Q&A videos where I can discuss in great length the nitty-gritty details of these things. Mary says, hopefully you can do an oil analysis given the oil news. Yes, I will indeed, and again that'll have to be part of a separate video. Okay, Mobalaji has a question. If an instrument is heading downwards, is it correct that if it intersects a shorter cycle VTL after it has intersected a longer cycle VTL on the same way down, what are its implications? Mobalaji, that's a great question. It's something I'm going to have to add to one of our Q&A videos because it's going to take some time to explain all of that. And Belarus is asking for crypto. Again, other instruments I will include in future videos. And ZL here says, do you think the next cycle top will be in early May? Well, that's a really great question. The answer to that question depends which cycle top. I hope that in today's video, I have already indicated that we are expecting a 40-day cycle top to occur before May, because the 40-day cycle must occur in the 40-day cycle trough must occur in the middle of April. We have an 80-day cycle trough expected in the third week of May, and so we would expect an 80-day cycle peak to occur before that. So when speaking about, will you expect a peak to occur or a trough, it's important to consider which cycle peak or trough we are speaking about. Sid Norris from Elliott Wave Plus. Hello, Sid. Great to see you. The Nasdaq needs a fifth wave up to complete the long-term pattern. If that is correct, it will move to all-time highs out of the October 2022 4.5-year cycle trough. So that's in reference to the Nasdaq we were looking at earlier, and the possibility that the 4.5-year cycle trough occurred in October of 2020. Sid is our go-to person for combining Hurst cycles analysis with Elliott wave analysis. It's a very powerful combination. So thank you very much for adding that, Sid. And Futures Trader says that they love these live sessions. Is there a way to move the Sentient Trader chart upwards vertically without changing the scaling? Interesting question. There are various ways that I can change the scale. I can drag the scale like that. Not sure if that's what you mean. And I can move it up by simply moving up the bottom of the chart like that. If I double click here, then it resets it, and I can compress it vertically, and I can expand it vertically. There are many ways of adjusting your charts. Perhaps get in touch with support, and they can point you in the right direction. Hopefully you should find every tool that you need in terms of adjusting your chart scaling. And Best Dekar has added their vote to Bitcoin. Yes, I will indeed speak about Bitcoin later, and thank you very much for kind comments from Belarus, and also from Sid. Great to see you all here. And with that, I set a target. I set myself a personal target for today's video. Most of my market update videos, I aimed for 20 minutes. For this live stream session, I thought that I would aim for a maximum time of 45 minutes, and we're coming in at 44 minutes and a certain number of seconds. So with that, I'm going to say thank you very much to all of you for joining me. let's put up our slide again. Thank you very much for joining me for today's live market update video. I hope to see you on future ones. Subscribe to our channel and hit that like button. There's something I keep forgetting to say. You meant to say that, I think, on social media channels. So I look forward to seeing you in future market update videos. I have many of these planned. We're going to be doing the Q&A sessions again. We hope to make that a weekly thing. We're also going to introduce getting started videos, basics of Hurst cycles. So we're going to be doing those, and we're going to be bringing our very popular geek updates for those who are quite advanced. So look out for future live streams. I'm going to be doing many more of these. Thank you very much for joining me. I wish all of you a great Easter weekend. I am going camping probably over the Easter weekend, so I will not be doing a video on Friday or on Monday, but I will be doing many more of these videos coming soon. So with that, I'm going to say goodbye and thank you very much for joining me.